it's the most liquid thing pretty much out there. And the spread's not too bad. And you know that you're always going to get the price that you want. Well, maybe not the exact price, but with liquid instruments such as the SPY, slippage might only be a penny or two at worst. So what I've done right here, once again, if we just right-click and go into Configure, all I did is attach the 25% pullback from high. Click on my symbol list here, and I'm just pointing the window to the SPY. And that's it. That's all the window is looking at. So what are my trade conditions? So of course, as with any type of backtest, it's probably, if we get good results from an opening strategy, starting right at the open, maybe we're able to get those fills, maybe we're not. I like to err on the side of caution and try to let the market, at least settle out a little bit, because even on the open, you could take some significant slippage even on the SPY. So the backtest time here is basically just after that first 15 minutes is over, we've created a little window here. This is the window in which we could take a trade from the strategy. And it's set up relatively simple. It's a 30-day backtest. We're using a 10-cent stop loss, 15-minute hold time. So let's see what we got here. Okay. See how nice and quick that was done as well, because it's only looking at one stock. So I think I've got everything dialed in here pretty accordingly. All right, that dials in our equity on a 4-to-1 ratio for a $42,000 buying power requirement on the busiest day, just doing 200 shares of the SPY. Now we might need to adjust our commission a little bit. Some of you might have higher commissions, some of you might have lower commissions, and you'll need to adjust that accordingly. Now on the SPY, we probably don't need to deal with 10 cents of slippage either. I think 4 to 3 cents of slippage on the SPY, 15 minutes off the open is pretty reasonable, if any. So once we get everything dialed in here pretty well, we can see the equity curve is nice and tight here. And if we look at the daily, keep in mind this is over the past 30 trading days. So all of these days are the winning days, here are the losing days. And of course, if we're using a 10-cent stop, we might get out a little bit worse, but once again, slippage on the SPY is not that bad. So, here we have a nice equity curve. We got a 28-cent average winner and a 10-cent average loser. So 18 trades over the past 30 days, and we're looking at a 66.7% accuracy rate for this particular event on the SPY. So it's relatively simple. The drawdown, keep in mind the drawdown of not even 1% on your starting equity, not that stomach churning to contend with. Of course, the buying power is going to be nice and smooth. It's going to look a lot different than when we're back testing an event across the market. We're only looking at one tradable symbol here. So, I'm not used to seeing this nice smooth curve either. It's a lot more peaks and valleys typically, but when we're dealing with single stocks, that's the way it's going to look pretty much. And of course, if you wanted to scroll back to the calendar and see on the days when the strategy did fire, what was its best winning days as opposed to its losing days. So of course, we are dealing with a SPY. So, there is something soothing about seeing these numbers as well, because the vacillations aren't that great. Okay, looking at a little bit more of the key data down here, 5 winning days in a row is its best winning streak. Worst losing streak is 3 days in a row. Biggest winning day on 200 shares, a whopping 76 bucks. Biggest losing day, probably realistically just slightly over that with some slippage. But it's these factors that we want to focus on, because guess what? This alert is just one of many. So, this is just one of the more basic alerts, which yields good results. So as we're going over these windows, I'd like everybody to try to do a little thought experiment here. And that is, take this panel right here, and imagine if it were translucent or see-through. So really, as we backtest more events for the SPY, we just kind of want to fill in the days where there is nothing, or simply add to these days. All right, so that's the 25% pullback that we just looked at there. So now let's take a look at another one here. This one, we're just looking at the opening range breakout, but with a couple of filter settings on the 1 minute volume filter. I could sing some elevator music while we're waiting for the odds maker to finish its results here. However, some of you might just hang up at that point. So I'm going to try to have some of these running in the background so we don't have to sit in awkward silence while these other ones are getting done. One more second here and she should be done. Okay, so here we have an interesting situation, which once again the goal is to add to the other winning days that we saw down here, or maybe fill in the holes. But by doing this, even though this one right here only spat out 4 trades, in the past 30 days, it is worth keeping around because, the more of these you create for a single stock, the more you have sitting there waiting to fire for these high probability events. And even though this one is only winning 50% of the time, average winner is 51 cents, average loser is 15 cents. So let me make sure I have things dialed in here. Yeah, that's about right. So, even though this might not jump off the page as much as the other one did, the important thing to realize is that, a 14.6% annual return based on one trade on the SPY is nothing to sneeze at, right? So I just wanted to give an example of, even though this doesn't look super, super sexy, it could still be a very valid part of building up a stable of single stock strategies. So, even though it's not lighting up every day, when it does fire, why not capture those moves? It would just add a couple of one trade a day to these days, and that's it. So I want to show one end of the spectrum and the other, so you can have a bunch of these, or, anywhere in the middle. Let's look at another one here. Well, I ran those early, so let me get this one real quick. Okay, this is another example. It's whenever the 1 minute volume spike occurs. And for the most part, the SPY adheres to its normal volume levels except for the days when things really move. So, once again, only 3 trades are distributed in the past 30 days, but when these fire, they seem to be extremely accurate. And just to make sure we have this dialed in once again, so you can see the process here. Pretty soon we have 10 of these guys, and maybe 3 or 4 of them are spawning most of the trades, but the other 7 are what we call supplementing, right? So once again, when the volume comes in and you treat the stock in this capacity, which in this case is a long, you can get some very good results. Very rarely do you see any strategies that are 100% winners. And the fact that there's only 3 there, the goal is to keep just assembling these things until we can't find any more. Whether we add to winning days that currently exist in other strategies or whether we fill in holes, doesn't really matter. All we're doing is building layer upon layer upon layer of high probability trade. And the nice thing about this is, if you're doing a SPY, you don't really have to worry about huge spreads or anything like that. Okay, so here's a short. Well, we've looked at some longs. What about shorts? This one's just looking at the 30-minute opening range breakdown. And just keep in mind, I mean, we're just looking at the SPY today, but how many tradable symbols out there in the marketplace? 8 to 10,000 on any given day. So while we're waiting for this to continue, tell you what, until he finishes, I was going to save these for last, but their scans are already done. So this is my long that I just created for Tesla. Okay, so some of you may recognize Tesla. It's a stock that moves. So here we're looking at the 30-minute opening range breakout. All right, so let me get my equity dialed in here. Okay, so once again, just to show you the time frame here, 15 minutes after the open, 15-minute hold time. And with a stock like Tesla, I felt it kind of, appropriate to just leave these wide open for now, because, that stock can open up as far as the spread goes. So I just wanted to get, some raw metrics here to see if we didn't use a profit target or a stop loss, if we just use a 15-minute hold time, what would the results be? And that's what you're seeing right here. Once again, doing 200 shares of Tesla, and of course you got to build in much more slippage on Tesla. So even if we up the slippage to 20 cents, now for some of you this commission may be low as well, but even if we bump the commission up to $5 a side and built in 20 cents of slippage on Tesla, we're still looking at quite a significant event here. So we've got 6 winning days in the winning streak. Best day 518, most losing days in a row 1 for the stop loss, or not even the stop loss, that was just the average. $100 would probably be maybe 2 points or something like that in Tesla. But the bottom line is that we're generating 14 events in the past 30 days. Pretty significant here. Nice small distance between, that net equity curve, which is always the most important. And then if we take a look at the calendar, the goal here is to maybe create some additional Tesla events to help fill in the holes, or you know what, you might just be happy with this because this is telling you when those events work. And once again, we're not consuming massive amounts of buying power here either. All right, so we've got a couple more to look at here. Since we looked at the long side of Tesla, let's see. That was the opening range break. Okay, so here is the SPY for a 30-minute opening range break to the short side. Once again, very simple. Just want to take the opportunity to show these guys right here, 30-minute opening range breakdown, and you might notice on some of them I have minimum and maximum 1-minute volume requirements. And that is because when I first ran this scan, the results were okay, but I wanted to improve them just a hair. So what did I do to do that? I cruised over here to our optimization tab. Price, time of day, and symbol weren't that pertinent. But basically what I did is I just went to, okay, if I wanted to, enhance this, I started hunting in the areas where I thought I might be able to improve the scenario here. So once again, another low count event. But keep in mind, we've already looked at about 5 other low count events that are all accounting for, 2 to 3 to 5 trades. So, once you get a nice little stable of these built up, then you're being fed things pretty much on a daily basis or every other day. And it really just depends on your appetite at that point. Okay, so we get our numbers dialed in here once again. And just by, a simple short on the opening range break for the SPY and a 60-minute hold here and a 15-cent stop loss, these are the results that were generated. So a 48-cent average winner, probably just a little hair over 15 cents for the average loser. And once again, we're not blowing the tops off. but these are realistic numbers. If all you have to do is trade this event and you can scrape 16% on an annual basis, or even if you captured half of that or a third of that in the real world, coupling those with the other single stock strategies that are showing these types of plays and these types of returns, I mean, things add up, and they add up quickly. We all know that, because at the end of some days we're like, oh my gosh, I can't believe I generated that much in commissions. Things add up. Looking at the daily here, once again, not that much, but looks like something of a consistent event. And we can just keep on keeping on here. It's so easy to just go, okay, well, what if I wanted to change the symbol here, and we go to Tesla again, and then, okay, what else might be interesting here? Well, what about Tesla? What about when the volume goes crazy in Tesla? What would happen? And I'm just pulling this out of thin air. I don't know what's going to happen here. So let's attach that to Tesla. And just so I don't get confused with all these windows on my desk, let's do that. Okay. We're going to eliminate these because I just want to do a bulk scan here real quick. So we're looking at Tesla. The only alert that we have attached is the 1 minute volume spike. We're not even bothering to put a value in here. So then I can say, okay, well, let's go a little shorter time frame. I always like to start on the low side and work my way up if I have to. And we'll just do, obviously, using a 15-cent stop for Tesla is not realistic. And we're just going to leave this wide open and go 30 days and see what happens. Okay. Nothing really earth-shattering on this first scan. 30 things were generated, but we're winning coin flip. Not enough spread here between average winner and loser. We don't have enough buying power either. So what if we want to set about trying to improve this? I'll just cruise over here to the optimization. Now price, not really applicable. I mean, there are some things to consider here, but it's a single stock. Now, time of day even is not that important either. So I'd come over here to my other filters, and I could start looking at all the filters that Trade Ideas offers. Well, what about 1 minute volume? Is there any magic happening here? Well, one thing's for certain, it seems like all these trades lose when it's between 350 and 400. Maybe if we eliminated that segment, maybe if we said, okay, over 400, that would only leave us 4 trades, but it looks like they would do quite well. So if we set a min of 400 on that, what would happen? And once again, I don't think we're going to find anything earth-shattering here, but this is the process that we go through. Sometimes you find something good right off the bat. Other times it takes a few minutes. Sometimes it can take hours. So that didn't help things at all. And typically when I see something like this, I'll just immediately try to flip it and say, well, maybe the short works better. Sometimes it does, sometimes it doesn't. So the bottom line on this one is, after a couple of gyrations here, it just doesn't look like this is where the gold is. So it's time to pick up the machine, relocate, pick a different alert. And ladies and gentlemen, we've got plenty of alerts here. So, using this methodology will allow you to find the sets like this. So I just want to take the opportunity to show people, that, using this methodology can really find some high probability events no matter what stock it is that you like to trade. Okay, so I think that's a pretty good spot to open up for questions right now. And Scott, are you with us?
Yeah, I'm here. Can you hear me?
Okay. Yep,
Great.
loud and clear.
Right. So, was it that time already? I was trying to answer someone's question in the chat, so I don't know what you were talking about.
Oh, no, that's okay. I just thought that now would be a good time to open it up for questions if anybody has questions about what I just
Oh,
talked
yeah.
about.
Okay. Yeah, I can help you out with the questions as well. The volume radar screen you were showing, you used the other day, is that a custom indicator members can get?
Right. It's not part of the pre-configured strategies, but we're more than happy to share it with you. Yes.
And just to address something that Susan and I've been going back on, Susan, it looks like you do have OddsMaker. I think you might have gotten that at some point. Email info@trade-ideas.com if you have trouble accessing OddsMaker. Marissa will help you figure out your account. And yeah, it's being recorded. We'll have this up by tomorrow. Any questions anyone wants to ask, please direct those to the questions panel. Um, hey, after optimization, should you increase days to 60 to prevent curve fitting?
Right, right. I mean, I just picked 30 days at random today, just to save us some time with, usually, usually the odds maker's pretty snappy, right at the close, it can get bogged down since we're processing all of today's data, incorporating it into our database. So I picked 30, but, that really just depends on the individual, you know. Um, that's one reason why we don't offer back tests going back for years, because we feel it's appropriate to have something that more or less tells us what's been working recently. Of course, recently to us is the past 65 trading days, just a little 3 months on the calendar. So then some of us like to go lower than 65 days. Some people back test for week periods at a time. If the market's made a big change, for example, once we got out of the lower range that we had established after the little correction in the market, and now we're pulled all the way back up to the previous range. That's gonna make a significant difference in the backtest results. So, I mean, uh, when you're dealing with an event-based system, when we're testing the event against the market, um, I mean, curve fitting is curve fitting, I guess, when you're talking about seeing if you develop a strategy and then you see if certain stocks work in that strategy, right? Whereas I'm taking a stock and seeing which events work for that strategy. So I'm not sure if that fits the definition of curve fitting or not.
So Debbie's got a question. What filters did you have for the 14.61 profit factor you showed just a moment ago?
14.61 profit factor. Was that was that one of the Tesla windows or the?
I don't know if you
Let's
can
see.
qualify.
Yeah, let me just get this pulled back up real quick, because I wasn't really keying off the profit factors at the time. Oh, that's the one that we just tried. But let me write that down. It was the profit factor was 14, right, which is pretty high. And
14.6 is what she wrote. Yeah.
yeah, I can easily identify it. And if anybody wants these, by the way, uh, all these links for these specific windows that you're seeing right here, just email us, and you'll have all these windows. So you
Yeah,
know.
the best way to do that, because some windows, probably not the ones he's showing right now, but like some of the volume screeners he's shown before, require a custom
Mhm.
formula. So when you ask for them, we actually need to add something to your account or send you some additional information rather than just the cloud link with some of these.
Right,
Um,
and the nice thing about these is there's no custom formulas.
yeah, so real easy to share. Just email info@ and ask for them, and Marissa or Jamie will send them out to you.
Yeah, no
Richard was
problem.
asking about the E-Trade installation. Now, the E-Trade version is very similar to our new web version. So it's essentially everything, including the odds maker, but no AI channel yet, and no charts. But the E-Trade version doesn't really need charts; they have their own charting. And it's called the Strategy Scanner inside E-Trade. Yeah, Frank, it's being recorded. Should be up tomorrow. Daniel, it's open. They just need to look at the playlist. Anyone that registered is going to get an email follow-up that's an automatic GoToWebinar system email with a link to the playlist that's the appropriate one. Not sure if that's a question, Richard, or an observation. Jimmy, maybe you can explain a bit about how you start to optimize a strategy. Like, what's your process once you have something you think you want to improve? How do you choose which filters to look at first, and then what to play with?
Well, I'm assuming he's referring to a single stock backtest, right? Or is he talking about the
He's talking about the odds,
traditional?
using the odds maker to optimize.
Right. Okay. Well, first off, before we go into that, here's the output that the young lady was asking for, where the 14.61 was in effect, right? Okay. So, once again, this is a single stock strategy. Now, if we were trying to craft, say, an event of filters and alerts, right? For example, if I spawned this window here, turbo brakes up or down, well, this is a very busy window. Now we're no longer talking about a single stock backtest. We're talking about backtesting this event here against the entire markets. So anytime this event presents itself in any of these markets, that's when I want to see it. Now, this is a window that I use for manual trading, so I know that if I backtest it, a lot of trades are going to come back. And, if we just run a generic scan here and say, hey, even run 60-day period, what happens if I buy this stock 15 minutes after the open, dump it after 15 minutes, and run a 60-day back test? Now it's gathering all the stocks that met that requirement, applying the rule set to it, and when it's done here, it'll show us the output, which, I've seen and done this many times before, so it's probably going to come in at 49% success rate is what I'm estimating. But while we're waiting for the calculation to complete itself here, and by the way, it's going to come back with a very large amount of trades. We'll see the results, and then we'll go about the process of attempting to optimize, or I'll show you the beginning steps. Optimization in and of itself can last for hours. And, here's the caveat, and this ties into the AI channel as well. You might work for hours and hours and hours doing this process. Once again, this is the heavy earth moving machine. Well, guess what? It doesn't run itself. Somebody's got to be running it and putting it through the paces and controlling it, and that is you, me. So, that process can be, you might get lucky and find something in the first hour, but to optimize a set like we're about to see takes multiple hours, right? And so that was the genesis of the whole AI channel, was let's have the machine optimize for us every 24 hours, which we couldn't ever do or hope to do as a human being. All right, so here we are at the end of the calculation. Hey, I was wrong. Look, it's winning 52.7% of the time right now, and I said 49, so I was a little bit off, but not by much. Which, hey, is better than a coin flip, right? You don't get those odds in Vegas. Only if they took a 00 off the roulette wheel would you have a 50-50 chance. That's why 00 exists. Okay, so look, it just returned 6,000 trades it backtested in the past 60 days. So once again, that's the heavy earth being moved. We could never hope to backtest that many trades in whatever that time period was, a little over a minute it took to find those trades. Okay, so obviously if I'm a trader sitting here running these scans, which I am and just did, I would look at this and go, wow, 6,000 trades in a 60-day period. Well, there's no way I could trade that. Plus the results here don't look that great. Looks like a losing proposition, so forth and so on. I look at the daily, pretty staggered. Plus I couldn't afford to trade, 1.2 million in buying power, blah, blah, blah. So I would say, okay, well, how can I shrink the trade stream down and at the same time improve these results? So we would come over here to the optimization tab. And here are all of the categories in which we can optimize. Now, this one's a little deceiving because there's a lot more in there than what meets the eye when we're looking here, because we could go through and do some very rudimentary optimization. like by price. Right now we're viewing all the stocks that came through the strategy, but we're viewing them in $20 price increments. Well, I want to get a little bit more precise, so I want to break it down into $5 price increments. So now we're looking at, hey, stocks between 20 and 25 accounted for this many trades in the cycle, but they don't seem to do too well. Whereas stocks between 30 and 35 seem to be doing okay. Stocks between 60 and 65 seem to do okay. So what we could do is we could make separate versions of the strategy and, only point them to these price ranges. Rerun the odds, see if it improves. That's one way to do it. We could also try to find out what's the optimum time that this strategy produces by looking at the time of day as far as, minute intervals here. As you can see, this one's set up to start looking to take trades at 15 minutes post-open. And you can see that's where the majority of the trades are being generated. The further you get away from the open, the less occurrences of any strategy you're going to have, for the most part. Now, this is just yet another way we could optimize, or, for example, we can optimize by the stocks that have come through this strategy and done the best. Right now we're showing the top 10. Well, I can see the top 10, 20, 30, 100, whatever I want. So I'm like, okay, computer, show me the top 20 performing stocks for this strategy. Well then, if I wanted to, I could make a custom list with only these stocks in it, rerun the back test. That's another way to optimize. But when you really want to get down to the nitty-gritty, and hey, by the way, you can find some really cool, strong statistical sets by optimizing by symbol, depending on the event that you're looking for. Now, to get down to the nitty-gritty, when I click on this tab, these are all the filters and trade ideas. So we could go through them individually and see, okay, I just clicked on 1 minute RSI and I can see that it seems like if you go and add that filter with these settings between 10 and 39.99 on the max, it seems like the stocks do really well. Predominantly looking at the trade count here and how many points were generated, we might go back and say, okay, now I'm going to install this filter with min of 20 and a max of 39.99, rerun the odds, see how that does. If we keep, maybe this makes it sweet enough to actually pay attention to, maybe it does not. But you see, this process right here is one of 100 points that we have to go through before what ends up coming out of the pipe is something that looks good statistically and that, that hopefully works moving forward as well, because, when we do optimize and come up with a good statistical set, of course, that's never a guarantee that it's going to work moving forward. We're looking at the past to predict the future. So, as with any optimized strategy, when you first develop it and it looks good, you don't know how deep it is. You don't know how deep the water is. You're not just going to jump in there headlong, because it might be only a foot deep, and then that's no good for your neck, right? So anytime we come up with a decent optimized set, then we want to sit that strategy on the desktop and watch it moving forward, because you never know how long you're going to get. You're never going to know, A, if it forward tests good, which that's what our hopes and dreams are, or if it does work, what's the longevity of it, right? How long is it going to function before you have to retool it all over again? You might get a day, a week, 2 weeks, 2 months, 3 months, anywhere in between, longer, shorter. But the point here is just to show you, if you want to set out and try to create an optimized backtest, that optimization tab, optimizing by price, time of day, best performing stocks for that strategy, or going through each filter and seeing, if you can find some gold there. So, I hope that condensed version of the backtest process was what you were looking for there.
Yeah, it looked good. It's something kind of on that. Can you go through this list and see the days that TSO or EXPE fired? I think Jonathan's referring to The previous scan or that one?
Well, I'm assuming all these other ones were single stock back tests. So what was the first symbol?
TSO.
Okay, so all we have to do is point the window to TSO and then go history.
And then the same for EXP if you want.
Right. So, obviously TSO is hitting lows with extremely accelerated 1 minute volume of 3 times normal or higher. So let's see. That was the first occurrence about an hour into the open, right? Boom, boom, boom. As it hit a new low, that's all it came across today on TSO. And then what was the other stock?
EXPE.
X-ray Paul Edward?
Yeah.
If it was hitting lows today with accelerated volume, it came through. But it's not looking like anything's showing up. One of these filters wasn't.
Did you get it
because
as
one of these
EXPE Edward X-ray Paul Edward, or did you miss the leading E? Yeah.
was it Expedia? Was it Expedia?
If that's what that is.
Well, EXPE. Okay, well
Yeah.
that makes sense.
There you go.
Everybody knows about Expedia and Priceline. Okay. Okay, so first occurrence through this configuration today was right at the close. Well, no, I take that back. 6s and 9s. Okay, so on the open today, and then later on, let's see, of course, that's got me curious now. So, uno momento. Okay, makes sense, because it hit a low here first, then it popped all the way back up, and then later on started cracking lows again. And then again here. See, when it was hitting all these other lows, the volume was not accelerated. That's why it's not showing up at those times. So right at the open, no surprise there. But the volume really kicked into gear 5 minutes before the close. As the seller finally couldn't resist, he had to sell, right? So boom, he pushes it lower on accelerated volume. Of course, volume's always going to go up at the close, just like it's haywire at the open.
Great. We got a question from Bill. Have you guys looked at highest correlation filters with performance, like relative volume?
Well, I guess I don't understand the question. Yeah, we do have relative volume, which is one of my favorite metrics to find the high volume stocks. Correlations with is the question. Correlations with what?
Maybe he can clarify that. Another one, would you recommend, as people are working in the odds maker, to rerun the odds maker after every change, or as you continue to optimize, or go ahead and make a bunch of changes and then run it?
Oh, no. Yeah, absolutely. Every small filter change you add, then you rerun the back test to see if that filter adjustment helped or hurt you. So it's very important to rerun the odds after every new filter that you add to your stable there. Otherwise, you don't, if you just throw a bunch of stuff together, then if it's better, you don't know really which filter's doing the heavy lifting there. So it's always, get in the habit of every time you add a filter, you rerun the back test to see if it hurt or helped you.
Cool, that makes sense. Well, we're waiting for another question or two. Just want to let people know that if they look at the handouts panel in their GoToWebinar interface, they can open a document that has a product code that's good until Friday, and that will save you half off of a first month, 25% off of a first year, or 25% off the OddsMaker lifetime license. So if you don't currently have the OddsMaker and you want to get the AI, it's a good chance to get into that before Friday at a quarter off. Just to let you know, the code is Office9, all caps, and that's available in your handouts panel for download. There's a PDF right there. Any other questions before we call this one a day? There are some more, okay. What are the best triggers for returns? Opening range breakouts, mean reversion strategies, RSI filters, etc., based on history?
Hey, that's a great question, and I wish I just had a canned answer to give you to say, hey, if you really want to make money, look at these alerts. But see, it's different for each and every event. For some stocks, the 25% pullback from the high is a really good long signal. For other stocks, it's a really good short signal. And it really does just depend on each and every stock out there. Each one's like a person. It has its own weird little characteristics and metrics about it. So there really is no secret alert that works, all the time. It's, when you start considering the filters that we have here, the number of filters and the number of alerts, which are all right here, while it is a finite number of possible combinations, it's an extremely large finite number. So, now I can tell you this, there's a lot of people out there, including myself, that love playing the opening range breakouts and breakdowns, on the different time frames, 15, 30, 60 minutes. But of course, we don't like to play all of them. We like to play the ones that look real pretty on the charts and where the risk is low, right? So, do I like opening range breakouts? Yeah, some of them. Only the ones that I think are pretty, right? Just like my intraday range breakout since the open, or intraday range breakdown since the open. I like playing those patterns, but only, I like to try to cherry pick the ones that I perceive to be the best. So, just as I have to pick and choose, when we filter, we change up the equation a little bit. So, as far as listing some of my favorite alerts, I love the pullback alerts. I love the opening range breakouts. I like trading stocks with extremely high volume. But as far as my favorite alerts go, the pullbacks, the opening range breaks, the NR7s for the micro consolidations, those are some of my personal favorite alerts. Of course, I can't speak for everyone.
So for percent, for percent 1 minute volume, are you calculating this by expected volume or that time of day?
I'm assuming they're referring to what we're seeing here, right? Which is the turbo breaks using the 3 times normal 1 minute volume right here. Now, that's just a metric that I picked a long time ago, not at random, but if I'm trying to target stocks doing extremely high volume as they hit highs and lows, then typically those stocks are doing that volume level all day, not just when I'm seeing them. So when we're looking at, say, this history here, and let me just point this back to all symbols again so we have more than one stock to look at. But if I just remove real time from this window here, and we go back to where, there's still a couple of hours left in the trading day. See, the metric that I'm referencing here with 1 minute volume, the value, 100% would be normal for this time period, but I'm saying 300%, which is 3 times normal or higher, right? 300 minimum. Now, as MNK was hitting these lows 2 hours before the close, not only was the 3 times metric met, but see, I'm also displaying that filter as a column, in which case it's going to feed me the exact value. So 300 is what I was requesting. This is 4,400. So as MNK was hitting those lows, it was doing 44 times normal 1 minute volume. Now, to answer the second part of your question, we're tracking, 1 minute volume for MNK every day, every minute. And our 65-day history, it's running an average, and it's saying, okay, based on the average 1 minute for MNK over the past 65 trading days, this is how much it usually trades in a 1 minute period. So to meet my 3 times more than normal, it would have to have traded 3 times as many shares as it normally does in a 1 minute period, referencing the last 1 minute candle that closed.
Good. I think we have enough time here to show Dave something. Show him how to get to the custom filters, and then also where the documentation is.
Very good. Give me 1 second to pull up a different browser here.
So yeah, Dave, there's custom formulas, and there's also documentation linked to directly where you interface with that on our website. And Barry posted the link to where you'd access that if you're logged in on our website. And
Okay, so Barry just posted the link because that's where I was going to. So if
yeah,
he's got the link, good. Okay.
account management
So
/list.html.
right. So for example, actually, it's my other browser. Hold on here.
Yeah, you probably logged
So
in.
let's pretend I'm a user and I want to go to the website and log in. Okay, I would just click the login icon up here, input my information, and then custom formulas, I would come here. Now, all of these that you're seeing, these are all my custom formulas. And what you would do is you scroll down here, and the U prefixes are all reserved for your custom formulas, U1 through U9, or U0 through U99. So, you know, when we go about creating custom formulas, if I wanted to create a new one, I would just say create new, and then I would have to program the formulas in here, how I want to view the information, so forth and so on. Now, the help document, once you're in this area, here's the help document for the custom formula editor. So as soon as you click on that, you can start to educate yourself on how these things work, how to create new custom formulas. And Scott, correct me if I'm wrong, but the custom formula list has also been added to this as well, right?
If that's a new change, I don't think the document's been updated. But if there's any difficulties at all, email support. So that email is info@trade-ideas.com, and we'll help you out.
Perfect.
I think that's a good way to kind of end it here today. So as we mentioned, download that PDF for some savings if you're not currently a client. Any questions at all, contact us, info@trade-ideas.com. You can email Jamie at jhodge@trade-ideas.com. Follow us on Facebook, like us on Twitter. You know where to find us. We post some additional things to those other social media outlets, so it doesn't hurt to follow us on there as well. Hope to see you at the next one. Remember, when you get the email to sign up for Jamie's Thursday webinar, it's the same time but on Thursdays, and it's Jamie's Trading Studio. It's be a little bit more focused on using trade ideas in different ways. Jamie, good one. Thanks. And
hey, I just want to thank everybody for taking the time to attend today. Hope you learned something, and good luck with the trading week.
Yeah, and if you don't already, stop by the trading room chat every day. It's free. There's a link to it on the footer navigation of our website. Thanks, everybody, for attending. See you guys in the next one.
Bye-bye.